Hey everybody, it's Pete Carmasino, Chief Market Strategist here at Chaikin Analytics. Thanks for joining me on the halftime show here on StockCharts TV. We're going to go over just a few things. We'll look at the market as usual. We got some breaking news that's really pushing markets higher and higher here. And probably when this is being aired, President Biden is going to be talking. So I'm probably going to get second place to people viewing his video today in the press conference at 1:20. But hopefully you'll watch a little bit of this and come back and see it again. We replay it during the day. So just a few things going on here. Obviously, the big news is President Biden has renominated Jerome Powell as Fed chair, for a second term, which I think is great. I mean, the markets like certainty. I think they like less new news to deal with. So markets are rallying big time here across the board. Dow, S&P, NASDAQ, and Russell 2000 all up. It had existing home sales better than expected today as well. I mean, look, that's the American dream. And it's not just about new houses and real estate and insurance and things of that nature that goes into the purchase of a home. But think about it. The after effects is really what has built this economy over years. But it's really piling into the retail sector. So we did a focus last week on the XRT. Hopefully you took advantage and started to look at some of those names. We had Macy's blowout earnings just once again, had a big blow off top and kind of pulled back a little bit. But I think in general, retail still looks strong. This week, I'm going to be looking at financials. I mean, the reason I'm switching sectors is I just want to sort of look ahead a little bit in the markets and see what's going on. So I'm going to look at the XLF ETF, right? That's the Spider Sector ETF that focuses on the financials and banks in general. We're going to look at the top names like we typically do. And I think you'll find some surprises there. We're going to look at names like Berkshire Hathaway, Citigroup, Wells Fargo, and kind of see where they set up, again, fundamentally with our rating, and then technically on the setups that we look at, and as well as on the ACP platform. So let's dive in and take a look. Okay, folks, we're back here at the charts. ACP platform first, we'll kick it off with, again, looking at the XLF. We don't rate it here, or actually we rate it on our system. We don't show it yet here on StockCharts, but that's probably going to be happening sometime. But we'll take a look. We've seen a breakout here, obviously, when rates have potential to rise, and we've got the potential of a new economy that's really bursting at the seams right now. I mean, banks in general are going to be in focus. But what I did was I built this list for today based on the top holdings in the XLF. I think you're going to be surprised at what you see. And if I go over to Chaikin Analytics, I've got the XLF already highlighted here. So that's the highlighted group. And we're ranking these based on the rating. So the way we're looking at the groups today, we've got information tech, obviously technology names doing great. Consumer discretion really are the only two that are ranked above the S&P. Close seconds and thirds are, XLB, XLE. And then kind of way down here, I would say toward the bottom of the list is XLF. And look at the top two names. It's Berkshire Hathaway and JP Morgan, all right? They make up almost, more than close to 24% of the fund. Okay, and the following ones right behind are Bank of America, Wells Fargo. Bank of America is 8%, okay? So you're talking close to, again, 45% or better, really, of the top 7 names, right? So you've got to pay attention to these names. That's going to tell you where the ETF itself could be being pushed in one direction or the other. But when you look at the top 2 names, Berkshire Hathaway and JP Morgan, again, they make up a bulk of it. And right behind it is Bank of America and Wells Fargo, right? So the Morgan Stanleys, the Citigroups, and the Goldmans are kind of rounding things out. But these top 3 names are really heavily weighted, right? So let's pop over and look at the first one, Berkshire Hathaway. Now, this is a bit of an oddity, right? For whatever reason, because the slash on StockCharts may not be coinciding with the way that we look at the name on our system, we've got a .B, okay, for our symbology here. So if I double click on XLF, it's going to bring in all of the names right in the chart. But the first one it brings up is the XLF chart, which we've had a relative strength breakdown here, but we are oversold. So we're getting sort of a positive and a negative kind of happening at the same time. But it did hold the recent pullbacks, which I do like. I think that's important to look at. But if I scroll down here and look at Berkshire B, BRKB, we're seeing, again, an oversold setup. So very similar. Now, Why does it look similar to the ETF? Well, it makes up almost 12% of it. So it's almost the identical chart. So if you're always looking at this particular name, you're kind of know where the XLF might be heading. But again, we are neutral positive, and that means it is a bullish stock that's just under its long-term trend and really has had trouble staying above it. So there is some resistance here. That's something to be aware of. But again, not going to see the rating here, but we are rating it. I just wanted to point that out. So the next one in line is JP Morgan. All right, we've got a neutral rating now. You must say to yourself, geez, how do you guys have a neutral rating on JP Morgan? It's a great company. It is. It definitely is. But when you're looking at financials, the way that we look at them and technicals, it's really just been a very choppy, setup, sold all the way off to 159. And even prior to that, back in September, just a few months ago, it's at 150. So it's definitely been choppy and moving around. The MACD is broken down. It's trying to push higher again. But if I look at the chart here on JP Morgan, I'll scroll up to, I'll scroll down to the days in this particular area, right? Or I can just type the symbol in, that's going to be quicker. JPM. All right, we'll look at the chart real quick. So again, it's neutral rated, bit of a sideways action. I could call this consolidation for sure. Negative money flow, negative trend, oversold. Now, almost similar to the XLF chart, right? You get that swing low. This is put in a new low though, right? A lower low. I'm not liking that. And I do see a lower high. So there's a series of, I would say, negative divergences that you might want to take a peek at and be aware of. But if you look at experts, they're not really out of the box bullish on the name. Analyst rating trend is kind of neutral. The estimate trend has gotten better. But if I look at the financials, debt to equity is high. Obviously, cash flow is going to be strong. But it's really the valuation, the price to book and price to sales, which is holding this the rating back on the financial area. So overall, all this is adding up to a neutral stance, which means to me, it's got just as much upside as it does downside. And you got to be careful when you look at a name like that. So we'll look at the next name in line, which I said is Bank of America here. So BAC. Now that's up 2.5% today. That's holding trend. This stuff definitely looks a little better, but it's still neutral, right? Again, probably from a valuation standpoint, technicals are a little better than JP Morgan, and you can see that clearly on the ACP platform as well. If I scroll up to BAC, which is right here in the neutral section of our list, you're going to see a similar thing. Now, the one big difference here is a relative strength setup is much better than the other two that we looked at. Now, it's only making up, I say only 8% of the fund, which is a big number, but behind Berkshire and JP Morgan, it's just a lot less. So, but oversold, good money flow, really for a while, just negatively, just recently. It broke below the trend line. And now, if it closes above that or better, we might, maybe we'll catch an upgrade. I'm not exactly sure what's going to happen there. But again, from a valuation standpoint, the way that we use the power gauge and the weights inside of there, it's just calling this a little overvalued right now. But the setup is clear. It looks good. Doesn't pay much of a dividend, but it's got obviously a low PE, and things look pretty good there. And then the other ones, we'll just kind of round them out. I know Wells Fargo was next, and a very, very similar setup on WFC. Financials, again, in the bearish setup. Technicals a little bit better. It does look better. You can look at the chart there. You can see that pretty clearly. And then if I come into WFC, which is going to be lower down here, it's alphabetized in the neutral section. I can see that, again, I have really strong relative strength. The neutral rating has been a little bit more persistent in the last couple of weeks. They did beat earnings, as most banks did. But if I look at experts, I got a bit of a mixed bag here. In the industry, the relative strength has not been great, but against the S&P, it's been better. Rating trend is kind of bearish. And I look on the financial side here, the debt to equity and everything else is kind of just adding up to a bearish setup. Not very bearish, but still leaning to the red zone. Again, not a bad setup here in Wells Fargo, much better on a technical basis. Fundamentally, just again, might be being held back from the valuation standpoint. So let's look at Goldman Sachs, GS. Again, much better, but on the financials, look at the rating here. Now this is a neutral plus. Let's go take a look at that. So that's going to be up in our system here because the neutral plus is basically a bullish name that's just below its long-term trend. So that's up 2.5% as I record. Much better setup on a technical basis, but I do have a negative relative strength, but I am oversold. So I've got a mixed bag, right? But this very bearish setup here, I'm sorry, very bullish setup here and a bearish financials is just kind of holding it back. If it does get above that, it will upgrade to a bullish name. And you can see what's happening here. Much better estimate trends. There's really no one shorting the name, probably very few. And obviously debt to equity being one of the drivers of the financial staying bearish. Cash flow is good, but price to book and price to sales are kind of equaling out a little bit better than the other two that we noticed. So again, that's the way you want to use the power gauge, combining fundamentals and technicals. Then the last one we'll look at is Citigroup, which is really a mixed bag. And I would say that it's followed this stock pretty well, staying neutral for quite some time, although it is up today, like a lot of the financials are. If I scroll down and look into Citigroup's power gauge, symbol C. Yep, I got a negative relative strength. And I think, again, the power gauge has really been downgrading the stock and kind of staying pat. Right around, you're seeing resistance in that $72 to $75 range. And the relative strength is obviously portraying that as well. There's one other name I don't think is on here, but we'll look at it really quick. We've got some time left, which is Morgan Stanley, symbol MS. All right, this is a neutral plus name. Again, relative strength just got negative, right? So not exactly calling this as a negative name, but it is a bullish stock that's below its long-term trend. If we can get to that 105, maybe that relative strength gets a bit better on the reading. It is oversold. So like a lot of names in this particular fund, you're seeing an oversold level. But again, I think the power gauge has done a great job of keeping you in the trade for as long as possible, but downgrading it when it had trouble breaking trend and staying at relative strength of negative. So if you could use both systems, that's great. If you can just use the system here on ACP, at least you're getting a peek into how this works. So that's all I have today for the video, and I'll close out in a second. Okay, everyone, that's all we have for today's halftime show here on StockCharts TV. Thanks again for joining us. Please leave some comments, some feedback on the YouTube section of the StockCharts TV page where the videos finally post. But again, thanks for tuning in. We've got a short week. Hopefully you'll be enjoying Thanksgiving with friends and family and really taking advantage of a longer weekend ahead of us. We've got a short market week, obviously nothing happening on Thursday, and Friday's got an early close at 1 p.m. So listen, enjoy the week. Hopefully you find this helpful. Leave your comments. Really appreciate any feedback. And have a wonderful holiday, and we'll be back to you next week on Monday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.